In a market that's just absolutely obsessed with rocket ship stocks, how do you really separate the next big thing from the next disaster? The next Icarus. Well, here at Iron Financial, we don't just follow the hype, we put it under extreme pressure. We are here to help you forge a stronger portfolio by putting the market's darlings into our forge. We want to see if they're made of solid steel or if they're just going to crack under a little bit of heat. And today we've got a really fascinating company in the forge, Planet Labs. The stock's been on an absolute tear, man, just riding this huge wave of the new space race. And you can see why. The bulls, they see a category-defining company with what looks like unstoppable growth. But the bears see something very different. They see a company that's burning through cash faster than rocket fuel on takeoff. So the big question we have to answer today is this. Is Planet Labs a solid framework you can build a position on? Or is it a financial black hole just waiting to swallow your capital? Okay, let's get into it.
So before we even look at a single number from Planet Labs' balance sheet, we have to understand the environment they're operating in. There is a massive force multiplier at play here, and it is not coming from your typical venture capital funds.
Right. You gotta forget Silicon Valley for just a minute. The real money, the capital that is fundamentally changing this entire landscape, it's pouring out of Washington, D.C., and frankly, other global capitals too. We're talking national security, defense spending, geopolitical intelligence. These are the new, powerful drivers. This isn't just some gentle tailwind we're talking about. This is a financial hurricane, and Planet Labs happens to be standing right in the eye of that storm.
And this chart, this just illustrates the point perfectly. Take a look. The S&P 500, which has had a very strong year, is up a very respectable 17.6%. You'd be happy with that return any day of the week. But then you look over at the defense technology sector, a staggering 125.9%. That is not just a trend, that's a tectonic shift in how capital is being allocated in the market. It's screaming at you, telling you exactly where institutional money believes the future is headed.
Exactly.
And Planet Labs is positioned at the absolute epicenter of this shift. So when you see a powerful move like this, you have no choice but to dig in and dissect the companies that are riding that wave. This is the macro force that has put Planet on every single growth investor's radar.
So here's how we're going to break this all down for you today. We've set the macro stage, now we're going to build the bull case, piece by piece. We're going to look at every single number that makes this company look like an impenetrable fortress of growth.
And right after that, we're bringing in the wrecking ball. We're going to take a hammer to that fortress and start looking for cracks in the foundation. That's the bear case.
Then, we're going to put those two arguments head-to-head in a section we're calling the Backlog Battleground. And finally, we will deliver the official Iron Financial verdict. Let's get to work.
Exactly. Before we get into the nitty-gritty of Planet's income statement, we have to know what kind of ground they're building on. Is this company's entire investment thesis constructed on solid bedrock, or is it all sitting on a pile of shifting sand?
That's a very fair question. The macro environment is everything here. So let's just take a quick, clear look at what Planet actually does on top of this foundation.
Okay, so in the simplest terms, Planet Labs operates one of the largest, if not the largest, Earth imaging satellite constellations ever put into orbit. But they're not just taking pretty pictures of Earth. It's so much more than that. No, not at all. What they're really doing is creating a living, breathing, searchable index of our entire planet, and it's updated daily. Just think about the power of that for a second. It is a fire hose of data that is absolutely invaluable to everyone from governments tracking military assets, to farmers monitoring crop health, to insurance companies trying to assess disaster damage in real time. It's a data moat. That's the product. Now, let's see how that product translates into the hard numbers that have Wall Street buzzing.
All right, it's time to start laying the steel frame of the bull case. We're going to look at the top-line figures, the numbers that have absolutely ignited this stock. These are the metrics that just screen momentum, market capture, and hyper-growth. Okay, let's see it. Let's see if the hype is really backed by hard data. What exactly are the bulls seeing that we really need to be paying attention to here?
This right here, this is the first massive pillar of the bull case. 41.1% year-over-year revenue growth in the fourth quarter. Just let that number sink in. In the current economic environment, that's not just impressive, it's explosive. This is a company that's in hyperdrive, and you can be absolutely sure that growth investors are sitting up and taking notice. This is the kind of aggressive expansion that tells you their product has found a deep and obviously very lucrative market fit. You don't post numbers like this by accident.
And that 41% growth? It translated directly into a record Q4 revenue of $86.8 million. Now that number alone is strong, but the really key detail here is how it compares to what people are expecting. Yeah, they didn't just meet or slightly beat Wall Street's expectations, they completely shattered them. The consensus estimate was only $77.8 million. They didn't just clear the bar, they pole vaulted over it.
This isn't just a beat, it's a statement. It signals that the so-called professionals on Wall Street might be fundamentally underestimating this company's growth trajectory.
And let's just put a really fine point on that. A 10.6% beat over the consensus revenue estimate. You gotta let that sink in for a moment. The people whose entire job it is to build financial models and predict this company's performance, they were off by a double-digit percentage. That is not a rounding error. That's a massive green flag for the bulls. It really suggests there's some hidden strength here that the experts are just now waking up to.
Now, what's really interesting, this slide here, this is the secret weapon behind that explosive growth we just talked about. This is the company's backlog, $900.4 million. Okay, so let's be clear. This isn't just hope or some rosy projection. This is contracted, signed and sealed future revenue. It's not just a sales pipeline, it is a fortress of future income. And it's up over 80% from the year before, which is just insane. And the most crucial point here is that this backlog tells you that the 41% growth we just saw isn't a fluke. It's probably just the beginning. This backlog provides incredible visibility into future quarters, and it de-risks the entire top-line story for investors.
And this is the capstone on the entire bull case. This is management looking at that fortress of a backlog and essentially telling the market, we're just getting started. Their official guidance for the next fiscal year is for revenue between $415 and $440 million.
And get this, the midpoint of that range is nearly $50 million higher than what Wall Street analysts were forecasting. That is a statement of extreme confidence from the management team. So the bull case is actually pretty simple. Explosive growth, massive beats on expectations, a gargantuan backlog, and a management team that is clearly firing on all cylinders. From the outside, it looks like an absolutely unbreakable fortress.
But every fortress has a weak point, and a gleaming steel frame is completely useless if it's built on a crumbling foundation.
Exactly right. All that amazing top-line growth is just window dressing if the company is hemorrhaging cash to get it. So now it's time to bring in the wrecking ball. Let's stop admiring the facade and start pressure testing the foundation to see if this beautiful structure can actually carry its own weight. It's time for us to find the cracks.
And you know what? We don't have to look very far. This isn't our opinion. This isn't some short seller's report. This is a direct quote from Planet Labs' own SEC filings, from their risk factor section. Our history of losses and uncertainty about future profitability. When a company tells you directly in black and white legal filings that they have a consistent history of losing money and that they themselves are uncertain if they can ever be profitable, you have to listen. This right here is the heart of the entire bear case.
And this number, this is what that uncertainty looks like in numerical form. This is their operating margin from that same record-breaking fourth quarter we were just celebrating. Negative 41.5%. Whoa, hold on. Let's put that in really simple terms. For every single dollar in revenue they brought in, they spent about $1.42 on their operations. That is not a sustainable business model by any definition. And here's the absolute worst part. A year ago, that number was negative 31.5%. So even though revenues surged 41%, their profitability actually got significantly worse. The building is getting taller, but the foundation is cracking faster and faster. This table, taken right from their financial statements, just lays it all out in stark reality. Look at the top line. Revenue, almost $140 million over a 6-month period. That looks impressive, right? Of course. But then your eyes travel down the page, past all the different operating expenses, and you land on the bottom line. A loss from operations of over $40 million. That means they are losing almost 30 cents for every single dollar of sales they generate. This isn't some small leak we're talking about. This is a gaping hole on the hull of the ship.
So we have this incredible, almost unbelievable revenue growth story running completely parallel to these widening losses. So what are the analysts? The same ones who are so spectacularly wrong about revenue, what do they think about future profits? Well, they expect things to get worse, not better. Wall Street is currently forecasting that the company's loss per share will literally double over the next year, going from negative 3 cents to negative 6 cents. So that unstoppable force of the bull case is running headfirst into the immovable object of unprofitability.
Okay, so the profitability concerns are 100% valid. A negative 41% operating margin is a serious structural problem. But the bear case tends to focus on the past and the present, while the bull case is all about the future, specifically that $900 million backlog. Right, so you've got this irresistible force of revenue growth meeting this immovable object of unprofitability. This is the friction point. This is where the two arguments collide head-on. This is the backlog battleground.
And this one slide right here, this is the entire battleground. This is the central conflict of the Planet Labs investment thesis. On the left, you've got the bull case in its full glory. Guidance for nearly $500 million in sales. It's a massive number.
But then you look to the right and you get the bear case reality check, guidance for just $5 million in EBITDA. I mean, how's that even possible? A company generates $427 million in revenue and they expect to produce only $5 million in earnings? That's a margin of just over 1%. It's a rounding error. This is the central question that every single investor has to grapple with.
And let's be very, very clear about what EBITDA actually is. It's a non-standard metric, what we call non-GAAP, which means companies have some leeway in how they calculate it. It stands for earnings before interest, taxes, depreciation, and amortization. You should think of it like grading on a curve for profitability. It's a metric that's specifically designed to paint the rosiest possible picture of a company's cash-generating ability. It does that by adding back huge non-cash expenses like the depreciation of their entire fleet of satellites. And even when they use this incredibly generous metric, Planet Labs is projecting that they will barely, just barely, break even. That is a huge red flag waving in your face.
So, we've built the gleaming steel frame of the bull case, and we've taken a sledgehammer to the foundation with the bear case. We've seen exactly where these two powerful forces collide. Now, it's time to step back, weigh all the evidence, and deliver the iron financial verdict. Is this a once-in-a-generation growth opportunity you can't afford to miss? Or is it a cleverly disguised value trap for investors who are just chasing hype? Okay, let's just summarize this one last time so it's crystal clear. The bull case is built on a very solid foundation of three key pillars: explosive, record-breaking revenue growth, a massive and growing backlog that basically secures future sales, and extremely confident forward guidance. But the bear case screams that that foundation is made of sand. It points to a company that is drowning in persistent, deep losses, with operating margins that are actually getting worse, not better, and a forecast that shows no meaningful profitability anywhere on the horizon. So, who's right?
So, here is our verdict. Planet Labs is a high-stakes gamble. It's a corporate structure that has been engineered for one thing and one thing only: growth at all costs. Every single dollar that comes in the front door is being immediately plowed right back into R&D, sales, and marketing, and launching more satellites to capture as much market share as possible. It is the classic Silicon Valley blitzscaling strategy.
Right, and the theory behind that is if you build the biggest, most dominant platform in what's probably a winner-take-all market, you can just figure out how to make money later. But the problem is, later can be a very, very long time, and the market's patience for profitless growth is wearing incredibly thin these days.
This company has a magnificent engine, for sure, but it's bolted to a chassis that's hemorrhaging cash. So for us at Iron Financial, the risk here currently outweighs the potential reward. The path to profitability is simply too uncertain and it's too far out in the future. They're built for speed, not for durability. They might be winning the race today, but we're just not convinced they have enough fuel in the tank to actually finish the journey.
And ultimately, that leaves you with the final question. When you look at Planet Labs, what do you see? Do you see a solid framework for future market dominance? Or do you see a fundamentally flawed foundation? So as an investor, do you bet on the rocket ship, hoping they somehow figure out the economics before they run out of fuel? Or do you put your money on the company that can actually afford the journey in the first place? The choice, of course, is yours, but choose wisely.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.